Miss one payment and the IRS adds a penalty, miss two and you're now paying interest on penalties. And if you're a freelancer, creator, or crypto trader making money outside a W-2 job, you can't just wait until April to pay taxes because the IRS wants their cut quarterly, and Q1 2026, that deadline is closer than you think. So today we're breaking down estimated tax deadlines, how they work, and why the IRS is watching your income closer than ever in 2025. So let's get into it, and welcome to Tax and Tech Explained, where we decode the financial rules behind freelancing, crypto, AI startups, and digital income. And I'm here to help you stay compliant, keep more of what you earn, and avoid expensive mistakes. And today's topic is estimated taxes, where we're covering Q1 2026 deadlines, who needs to pay, how much to send, and what happens if you don't. And if you're making money outside a traditional paycheck, this video could save you thousands. So here's the reality. If you're a W-2 employee, your employer withholds taxes from every paycheck and the IRS gets paid automatically. But if you're self-employed, freelancing, trading crypto, running an AI SaaS, or earning creator income, you're responsible for paying taxes throughout the year. And that's where estimated taxes come in, because the IRS requires you to pay taxes quarterly if you expect to owe more than $1,000 when you file your return, and it's not optional, it's tax law. And in 2025, the IRS has ramped up enforcement, because they're tracking digital payments through Form 1099-K. So if you earned more than $5,000 through platforms like PayPal, Venmo, Stripe, or Etsy, the IRS knows about it. And crypto traders, the IRS now requires brokers to report your transactions, and AI founders raising capital, your equity and token distributions are taxable events. So bottom line, the IRS is more informed than ever, and if you're not paying quarterly, you're setting yourself up for penalties, so you need to make estimated tax payments. If you're self-employed or a freelancer, you're a gig worker on platforms like Uber, DoorDash, or Upwork, you earn crypto income from staking, mining, or trading, you're a content creator or influencer, you have rental income or side business revenue, or you expect to owe $1,000 or more in taxes after withholding and credits, and if your only income is from a W-2 job with proper withholding, you're probably fine. But if you have any income that doesn't have taxes withheld, estimated payments are your responsibility, and estimated taxes are paid 4 times a year, and here are the 2026 deadlines. Q1 2026 is April 15th, 2026, Q2 2026 is June 16th, 2026, Q3 2026 is September 15th, 2026, and Q4 2026 is January 15th, 2027. And notice something, they're not evenly spaced because Q1 and Q2 are only 2 months apart, and the IRS doesn't follow calendar quarters, they follow tax quarters. And here's the key. Even if you start earning income in February, your first payment is still due April 15 because you're not paying for the previous quarter, you're prepaying taxes on income you're currently earning. And the IRS wants you to pay either 90% of your current year's tax liability or 100% of last year's tax liability, which jumps to 110% if your adjusted gross income was over $150,000, whichever is smaller. And this is called the safe harbor rule, and if you pay at least this much, you won't face an underpayment penalty even if you end up owing more in April. So here's an example. Let's say you owed $20,000 in taxes last year, you can pay $5,000 per quarter, that's $20,000 divided by 4, and be protected from penalties even if your income increases this year. But if you know your income is lower this year, you can adjust and pay less. Just make sure you hit that 90% threshold, and paying estimated taxes is simple, and you have 3 main options. Option 1 is pay online through IRS Direct Pay, which is free. Option 2 is use the IRS 2Go mobile app, and option 3 is mail a check with Form 1040 ES. And most people use Direct Pay because it's fast, free, and you get instant confirmation. And pro tip, set calendar reminders for each deadline because the IRS doesn't send you a bill or a reminder, so missing a payment is entirely on you. And let's talk about what's changed and what you need to know in 2025, starting with Fact 1. The IRS lowered the $1,099K reporting threshold to $5,000 in 2025, so if you received payments through third-party platforms, the IRS is tracking it, and this affects millions of freelancers and creators who previously flew under the radar. And Fact 2. Cryptocurrency transactions are now reported by brokers starting in 2025, so if you sold, traded, or staked crypto, the IRS knows your cost basis and gains, and estimated taxes apply to crypto income. And Fact 3. The underpayment penalty is based on the federal short-term interest rate, which in 2025 is around 8%, and that's not a small number because if you owe $10,000 and didn't pay quarterly, you could face hundreds of dollars in penalties. And Fact 4. If you're a high earner over $150,000 AGI, your safe harbor jumps to 110% of last year's taxes, and this prevents wealthy taxpayers from underpaying based on prior year income. And fact 5. The IRS offers penalty relief for first-time filers and reasonable cause situations, so if you're new to self-employment or faced a hardship, you may qualify for a waiver, but you have to request it because it's not automatic. So here's what you need to do. Right now. First, calculate your estimated tax liability by using last year's return as a baseline or project this year's income and multiply by your effective tax rate, which is usually 25 to 35% for self-employed individuals. Second, set up quarterly payments and mark your calendar for April 15th, June 16th, September 15th, and January 15th and automate reminders because the IRS doesn't give extensions on estimated taxes. Third, use the safe harbor rule and pay 100% of last year's taxes or 110% if high income to avoid penalties even if your income changes. And fourth, track your income monthly because if your income fluctuates like it does for most freelancers and crypto traders, adjust your quarterly payments accordingly since the IRS allows unequal payments as long as you hit the annual threshold. So stay ahead of the IRS and don't wait until April to figure this out. And estimated taxes aren't complicated, but they are mandatory. And if you're earning income outside a W-2 job, the IRS expects you to pay quarterly and miss a deadline and you're paying penalties and interest, but stay on top of it and you'll never stress about tax season again. And Q1 2026 is due April 15th, 2026, and that's your first checkpoint. So if this video helped you understand the law behind your income, hit that subscribe button because smart money needs smart rules. And drop a comment if you have questions about estimated taxes, and I'll see you in the next one.